What a pain to work so hard and realize that your hard-earned money is not yours because it will first go to Uncle Sam in taxes. This happened to me, and I know this happened to you too. But things don't have to be that way. Did you know that when you own a business, you have the opportunity to deduct the taxes paid to your employees and your children from your business taxes? That is, you have the opportunity to subtract the salary from your business taxes and help reduce your taxes. So putting an illustration in our tablet, things will look like this. So here is your business. And with every business, eventually you will need to hire employees, right? And you have options when it comes to hiring employees. One is to hire someone external, someone who's a non-family, and you can also hire family. And in today's video, we're gonna focus on your kids. You see, the benefits of hiring your children goes beyond a simple tax deduction. In fact, the IRS says that children earning less than $12,950 a year do not have to pay taxes on that amount earned. Now, this is based on 2022 numbers. For updated numbers, you will always have to check with your accountant, okay? So back to the topic of children earning less than $12,950 a year, not having to pay taxes on that amount. This is basically a 2-for-1 for you because 1, you will benefit from the deduction, paying less in taxes, and 2, the money you're paying your children is tax-free. Let's be clear. When you have a business, it is very likely that you will need to hire labor. And if your children manage to contribute to your business, why not hire them? Remember that at NOVARISE, our mission is to educate as many people as possible, regardless of age. And this episode offers a starting point for parents and kids to work and learn together. By hiring your children, you can teach them to be responsible from an early age. You're also making it easier for them to earn, save, invest their own money from a young age. And the icing of the cake, you are saving money on taxes. So let's look at another visual in our tablet. So you have your business, right? And you hire employees, right? And so in this case, we're gonna, include 3 of them. Each of them are gonna play a role depending on the scenarios that we're gonna review. So first you have employee 1, and we'll call this person our popular fictitious character, Chepito Gonzalez. And you're gonna have your kid number 1, and you will also have kid number 2. Now, what we're gonna do is to go over 2 scenarios. So we'll have scenario 1 and there is scenario 2. So let's assume that in scenario 1, you have a business that's generating $100,000 a year. And in this business, you are hiring a sales manager and you're paying this person $30,000 a year. So Chepito will be your sales manager, okay? And everything else, you take care of it by yourself. And so when you deduct Chepito's salary, we're going to assume that you're not paying yourself a salary either, right? You are creating, so to speak, a taxable income of $70,000. Now, this means that the $70,000 that you're looking at right now are going to be subject to taxes. And let's assume that if I have to pick a random number, that your tax rate is 25%. Where did I get this 25? Out of my imagination. It is a completely fictitious number, right? And so let's say that you're paying 25% in taxes. That will mean that the amount of taxes that you have to pay at year end is amounting to $17,000 $500. This scenario, once again, is with you hiring only one person, and then you as a business owner are doing everything else on your own. So let's say that amongst the role that you're performing, there is social media manager, and let's say you do a couple of accounting steps here and there, like, getting your receipts together, keeping track of your expenses and stuff like that. So we're just going to put this accounting. Okay. Now, what we're going to do is go over scenario 2. In scenario 2, there's some things that are going to be similar, like the income that your business generates. So we're going to keep that at 100,000. And we're also going to keep the sales manager that you have, Chipito Gonzalez, with a salary of $30,000, right? But now what we're going to do, we're going to hire your kids into the business. So you have kid number 1, and this kid, it's very savvy with social media. He knows how to handle your Instagram account, your Facebook account, YouTube, you name it, TikTok, don't even mention it. And this kid, right? So we're going to call it kid 1. You're going to pay him $7,000. Now, you got a younger kid, right? And she's actually really good with keeping things in order. She likes to organize things and put them into categories and buckets. And then you realize that she is perfect to be your right hand with the accounting stuff, right? Keeping the receipts in order, assigning them a category and stuff like that. So you're going to hire your kid and you're going to pay her $5,000. So now we got 2 new employees in your business. And when you run the numbers, that means you are left with a taxable income of $58,000, right? So once again, taxable income. And assuming a tax rate of 25%, again, very random number that I just picked up, assuming that you have to pay a tax rate of 25%, you will end up having to pay $14,500 in taxes. So that is a saving of $3,000. And out of this, you got a couple of benefits. So by hiring your children, you're creating time for yourself, time that you can leverage to focus on the strategy of your business, or why not, maybe even expanding it. Now, I want to pause for a second and ask for your opinion. What do you think about what I'm sharing so far? Let me know down in the comment section below, and your comment will help me get to know you better, so that way I can design a much better episode that can meet your needs in terms of what you're looking to learn. Now, back to the episode. So based on the examples, you will see that if you hire your children in your business, you could be saving, under this example, $3,000. And that is money that they are earning while you, as the business owner, focus on the growth of your company. And most importantly, you are teaching your kids how to fish, getting them ready to face life as smart and financially independent adults. Now, this is not the only way to save on taxes. For more tips on how to save even more on taxes, feel free to check out this video. Remember to always consult with your accountant before implementing any tax strategy.